Bismillahirrahmanirrahim. Hello, dear friends and students. So, in this video, I'm going to explain the users or decision makers. The users or decision makers are the people who receive the accounting information and they make a sort of decisions and they make a sort of plan and so on. The people who need accounting information are basically divided into two groups. Group 1 can be called as the external users and Group 2 can be called as internal users. Internal users are the people who are inside the organizations and directly they are in contact with the business. Simple, you can say those who are inside the organizations can be called as well as the internal users. Are directly involved in the operation of the business. And these people are divided into three. Number one can be management. Then anyone who is in the management. Board of directors can be management, chief executive officers or the management, finance officers, plant manager, store manager, HR manager, marketing manager. Several managers and directors that we have in the organization all are part of management. So these people needs accounting information. Why they need accounting information? We will explain it shortly. Second group is owner or owner of the business or shareholder or partner of the business. And the next one, of course, we can call it as well as employees. Employees are also a part of basically management, but usually when we talk about, for example, management, usually we talk about those people who are making plans, who are making policies, and so on. But usually when we talk about the employees, basically all of them are, once again, I'm telling they are the employees, but usually when we say employees, employee in this case means usually lower level, and we talk from the employee point of view. The next one is the external users, and these peoples or external users are those people who are in contact with the business, but they're of course outside of the business. They can be creditor, they can be investors, they can be government agencies, they can be of course suppliers, they can be consumers, they can be general public. Remember that all this video can be found out in YouTube, Mahibullah Zamani. So now I'm going to explain different users. The first type of user can be called as the investors or potential investors. First of all, what is investor or what is investment? Investors are the people who want to make investment in the business and they have not invested yet in the business. They want to become the investors in the business. So that is why they can be called as a potential investors. There is a possibility for them to join in the business. There's a possibility for them, or they like, or they're willing to become our member or our investors. So this guy, they can be called as well as the investors. So if the investors want to make investment in the business, before to make investment in the business, they need some sort of information, especially of course accounting information. They need accounting information in the business because of this one. Why? Because of what? Because of potential profitability. Investors need to check the potential profitability of the business. Potential profitability of the business simply means, of course, future for profitability of the business. Investors want to understand that how much will be my profit in the future. If there is a good profit in the business, so I want to invest. So I'm willing to invest in this business. If there is no profit in the business, am I stupid to make investment? No. So that is one of the logic that investors want to check the potential profit of the business. Potential profit of the business simply once again means future profitability of the business. Now the question arises that from where they can get the future profitability of the business, or from where they can get or they can expect the future profitability of the business. The future profitability of the business can be estimated from the past performance of the business. As I said in the previous videos, futures somehow depends on the past. So in order to check that how was the performance, how will be the performance of the business in the future, you need to at least go for the past and check that how was the performance of the company in the previous year or in the previous years. Why? Because always there is a trend in the performance of the business. If the background of the company was good, it might be good in the future. If the background of the company was totally deteriorated and it was totally bad in the past, so definitely it may not be good in the future suddenly, right? So that is why we need to check the past performance of the business. Past performance of the business can be checked from where? Can be checked from the profit and loss statements or statements of profit and loss that we will explain it inshallah in the next chapter. In this statement, for the time being, let me tell you that in this statement we record all expenses as well as revenue of the business, and finally we find out whether the business made profit or whether the business suffered loss. That is one of the cases that why investors need the accounting information. The second reason that why investors need accounting information is basically this one. What is that one? Security of their investment. See the point. When investors want to make investment in the business, they need two things. Point number one, they need profit, and point number two, they need the security. It means they want to make sure that their investment is secure. It means two things are important. Number one, there should be a profit, or number two, if there is no profit, at least my investment should be safe, right? This is the basically a kinds of condition which are needed or the prerequisite for the investors to know or to understand from the business. Now the question is, if they want to check, for example, the financial, if they want to check the security of their investment, whether the investment is secure or not, so where they want to go or what documents they need to check, or for this purpose, which things are to be checked in the accounting information. They have to check the financial strength and solvency of the business. Financial strength means, of course, strength. Financial strength means strongness of the business. Whether the business was strong whether the condition of the business is good or not. Whether the position of the business was strong or whether the position of the business was weak. So this is the case. And solvency, of course, in this case means, as we will talk later on, solvency means مفلسي. Solvency means, for example, how much asset we have and how much liability we have. How much is our asset and how much is our liability. Asset means doroi and liability means, of course, cruise, right? So each business is like this. They have their assets as well as they have their liabilities. So we have to check that whether the business has enough assets to be provided as a security for me or not, right? Let me explain in this way. Suppose when you want to, for example, even in the case of loan, suppose when you want to provide someone loan, point number one, you check that whether they will be able to repay or not, and point number two, you check that whether the business have something to provide as a security or not. Even the investor is also in this case. Number one, they check the profitability, and number two, they check the performance, they check the investments, the security of their investments. And for the security of investment, they check the financial strength and weakness. Now the question is that if they want to check the financial strength and weakness, so from where they can get this information? They can get this information from financial positions. Also, we can call it what? Balance sheet. So shortly, we will explain, inshallah, what is balance sheet. But remember, in the balance sheet, we have all assets and all liabilities. And as per the rules of accounting, both of them should be equal. If unfortunately the liability or more than asset, it means is this business is called insolvent. Once again, if unfortunately the asset of the business is more than liability, it means this business is insolvent. So we never should make investment in such kinds of organization. This was regarding investors. Point number two is regarding employee and trade unions. Employees are also the people who need accounting information, and trade union representative or labor union representative. These people also need some sort of information in order to defend the benefit of the employees or labor in the organizations or trade unions. Number one, why they need accounting information? Because of this one, settle industrial disputes. If there is any dispute, if there is any conflict, if there is any problem in the industries, through the financial informations or accounting information which are provided by the industries or organizations, we can look to those information, we can find out the proper solution, right? Point number one. Point number two, avert lockout and strikes. Even the information which are provided in the field of accounting can be, for example, can prevent, for example, the strike of the employees in the organization. For example, employees may not be happy that we don't have enough, we can say, salary, we don't get a bonus from the organization. Why, for example, our salary is not increasing year by year. In this case, they may go for the strike. But before to go for a strike, it is better to show them the accounting information, and this accounting information will act as a proof for them that the position of the business is not good. We don't make any good profit. Our position was not good. Our performance was not good in the last year. So that is why we cannot increase your salary. You can convince them, right? Otherwise, if there is no accounting information, so of course there will be some sort of strikes in the business and so on. And it is totally bad for the business. The next one, which is very important from the employee point of view, is demand for wage hike. Wage hike, of course, means the increase in the salary. Employees need accounting information to demand for the more wages or more salaries. When they check the accounting information, if they find that there was a good performance in the last year, so they may demand that if you have a good performance, so please increase our salary or our benefit as well. So they may demand for the bonus, they may demand for higher compensations, they may demand for more fringe benefits. Fringe benefits, you may study, fringe benefits also can be called as non-monetary benefits. Those benefits which are provided by the organizations, but they're not provided in terms of money. For example, organization provide hostel benefits. Organization, for example, provide transportation facilities. Organization, for example, provide food facilities. Organization, for example, provide children education facility or your education facility and so on. All of them can be called as well as a fringe benefit. So the employees may demand for this sort of benefit from the organization, or at least they can demand for better working conditions. That if the organization making a huge profits, why our working conditions should be too bad? So it should be good, right? So we demand that to increase our salary, give us some bonus, working conditions should be good, and so on. So these are the points that are needed by the employee. Especially the last point is very important. Usually employees need this one. So they demand for more wages, more salaries, of course, the several other benefits, and so on from the business. And all of these can be expected from the business only if they have a good performance, or it means they made profit. So point number 3 is regarding lenders and suppliers. Supplier can be those people who supply something to the business. Supplier can be supplier of goods. For example, someone who provides something to the business can be called as what? A supplier. Then supplier may supply you something on cash, or supplier may supply you something on credit basis. Later on we'll talk about the cash and credit, but for the time being, cash means when they sell, they receive their money, and credit means when they sell, they receive their money later on. Supplier even can be called for those people who provide money to the business, right? So supplier can be called for those people who provide goods to the business as well as who provide money to the business. But lender, or those people especially who provide money to the business on credit, and if it means they lend for the business. So simply you can say the lender are a part of the supplier. Supplier can include the cash transaction as well as the credit transactions, but lender includes only the credit transactions. Now the point is that Why they need accounting information from the business? The lender, when they provide loans, supposed to the money to the organization, or the supplier, especially if they want to sell something on credit basis to the business, they want accounting information because of this point. Because of what? Because of repayment. Repayment means, for example, when the lender, suppose let's take that Cardon received 1 million loan from ATG Bank. In this case, ATG Bank is the lender. ATG Bank want to check that whether the Cardon will be able to repay my loan or not. So in order to check the ability of the borrower, the lender should check the following points. They check what? They check the future profitability of the business. Why? Because loan will be paid in the future. So if your future profitability is good, it means you can repay my loan. Otherwise, you will not be able to repay my loan, so I should not provide loan for you. That's the case. The next is, if you want to check the future profitability, like the case of investors, of course, you have to go for the past performance of the organization. The past performance to be checked in order to check the future profitability. As we said before, the future profit depends on the past. If investor, if the borrower were good in the past, if they had a good performance in the past, it means they may have a good performance in the future as well. So it is better to provide them loan and they will be able to repay it. Otherwise, if their past performance was not good, so future performance also may not be good. So that is why, so we should not provide them loan. Fine. So once again, how they can find out? They can find out the performance of the business from the statements of profit and loss. Point number one. And the second thing, they find out it from the cash flow statements or statements of cash flow. We will explain the statements of cash flow, the statements of income statement, the statements of balance sheet, and one more statements by the name of owner equity statements in the next videos. But for the time being, this statement basically shows that how much is the inflow of cash to the business and how much is the outflow of cash in the business. And also it shows that whether there is enough whether enough cash is available in the business or not. If enough cash is available in the business, it means this business is able to repay my loan. If there is shortage of cash in the business, it means this business is not able to repay my loan. So point number one for the lender is this one. They want to check the repayment, the reached payment. In order to check the repayment, they have to check the future profitability of the business. Future profitability can be checked from the past performance. Past performance can be checked from the statements of profit and loss. And also it can be checked from what? From the cash flow statements. The second thing, like investors, the supplier need to understand is the security. Whether if they provide loan for the business can provide them enough security or not. For this purpose, once again, like investors, they have to go for the financial strength and solvency. Whether the strength of the business is good or not, whether the business is solvent or not. Never, never you should provide loan for those business which are insolvent. Insolvent means muflis. Muflis means those people which have more liability as compared to their assets. Their liability or cars is more than their assets or dowry. So those people can be called insolvents. Not only in the case of peoples, in the case of business as well. And how you check it, once again, like the previous one, you can check it from the statements of financial position of the business. We will talk later. The next accounting user is government agencies. Yes, even these people need accounting information from the business. Why they need accounting information from the business? This one. How the economy is performing. In order to check the performance of the economy, in order to check, for example, the inflation rate in the country, in order to check that whether the bankings are doing well or not, in order to check that, for example, whether we can say the industries are doing well or not, how much is our import, how much is our export, whether there's a growth in the economy or not, rate of employment is how much, and so on. Bank, how much is the rate of interest in the country, For example, what is the fluctuation, the exchange rate, and so on. All of these are the points that the government should basically check that. In order to make what? In order to make in order to make plan financials and industrial policies. So what is the purpose of this sort of information for the governments? Government basically need to make plans, financial plans, and as well as, of course, they have to make some policies for the industries, right? So after checking the performance of different companies or different organizations, they may make a policy for the industries. They make a plans for the organizations in order to have a good performance in the future. So that is why government agencies need this one. One more thing that why government agency need this one, for example, because of this one, tax authorities need accounting information. Why tax authorities need accounting information? Tax authorities need accounting information from financial statements of the business in order to assess the amount of tax payable. Tax authorities need the financial statements of the business to check that how much tax we should collect from the businesses. See the point, bros? Unless you have a proper reported financial statements, you cannot pay tax to the Ministry of Finance in our case, or we can say to the tax authorities. So first of all, you should have a proper accounting information or financial statements, and after that, it should be properly audited. You may learn it later on. After audited financial statements, you can fill up a tax return form to the tax authorities and pay your tax. So that is why government agencies need accounting information. I have just mentioned a few points. There are several points. For example, in order to implement monetary policy, in order to implement industry policy, and so on, financial plan, strategies, in order to implement budgetary, and so on. For all of those purposes, government need accounting information. Next one, or next users of accounting information is customers. Customers are the people who purchase something from the business, right? Mushtari. So these are the people who purchase something from the business, so they need sort of accounting information. Now the point is that why they need accounting information. Point number one, continue to supply and no danger of close down. And this is especially important if the customer is dependent. If the customer is dependent on a company for a specialized product. Suppose, let us say that you are the only supplier in the market and you supply a particular materials to 3 different organizations, right? You are the only supplier. If you stop supplying, their operation also will be closed down. So it means the customer will check your performance, whether you can continuously provide the materials in the market or not. Why? Because their operation depends on your operation. If your operation continued, your operation also will continue. If you stop, they also will stop. And it's a problematic for them, right? So that's why the customers need accounting information to check that whether you continuously supply them materials or not. That is point number one. Point number two is regarding discount. Discount means takhfif, right? So the customer will check that whether your organization will provide discount for the customers or not. Yeah? So usually they check the past performance of the business. If you have already provided some kinds of discount for the customers, it is already written in your book of account. So the customer will feel that yes, if they have provided discount for the customers in the last year, they will provide for us as well. So let it be their customers. Point number two. Point number three is regarding liquidity of the business. Liquidity of the business means whether the business has enough money in the business or not, or whether the business has enough cash in the business or not. See the point here. I mentioned more liquidity, business can sell on credit. Less liquidity, business may not be able to sell on credit. See the point here? Customer will check the financial information of the business or accounting information of the business. In their accounting information, it is available that whether the liquidity of the business is more or not. It means whether the business has more cash or not. If the business has more cash, it means they can sell something on credit to you. If the business has less money, it means liquidity of the business is less. In this case, the business may not sell on credit. In this case, the business, of course, should sell something on cash basis. And usually the customers like to purchase something on credit basis. Credit basis simply means they like to purchase today and pay after 1 month, after 2 months, or after, for example, a particular time period. So if the business has more liquidity, they can sell something on credit. Otherwise, if they don't have liquidity, so be sure that you as a customer, the company may not sell you something on credit basis, right? So you have to check from the past performance. The next thing, which is very important, is bad debts. You will study what is bad debt, but for the time being, when we sell something on credit basis to the customers and customer promise to pay in the future, but unfortunately customer do not pay, they reject the payment, they cannot make the payments, so that part which we cannot collect back from the customers can be called as well as a bad debt, right? So now the customer want to check that whether this point, whether is it possible to commit fraud with the business or not. Is it possible to make some sort of bad debt with the business? Is it possible to cheat the business or not? So they check the accounting information. If already there is a huge amount of bad debt with the business, it means the other has committed a fraud. So I also can do some kinds of fraud with the business. So let us be their customers. So these are the 4 points that the customers need accounting information from the business. Point number 4. Next one is the public. Even the public also need accounting information to assess the effect of economy on several things. To assess or to check the performance of the company on 2 or 3 things. 1, on the economy. The public want to check that how is the performance of this company or how is the performance of this industry on our economy, especially in the case of, for example, employment. Whether this company can provide employment for us or not. If your company has provided a good employment facility for the company, for the economy, it means you have a good business or your business is very good for us. Otherwise, so it is useless from the public point of view. The next thing that the public want to check from your company or they expect from your company is local environment. For example, in the case of corporate social responsibility or corporate social programs. So it means that whether your company, for example, do something for the society or not. Although, of course, your company is in our environment, you may provide us some kinds of pollution and so on. You use our resources, you use, for example, our assets and so on. So against these resources or pollution which you create for us, whether you provide something for our society or not. So this can be called the corporate social responsibility, whether your corporation do something for the society or not. So the public will check your corporate social responsibility. Any company which they have a good corporate social responsibility, so people also are interested in this organization. Point number 2. Point number 3, which is the last, the public check the local community. For example, patronizing the local supplier. For example, whether your company use the supplies which are provided by the local supplier or not. But if, for example, they found that your company do not use the resource of the local supplier, but instead of that you import, for example, from outside or you import from abroad, so usually the public may not like your company. So now let us summarize. Publics are usually interested, for example, from the employment point of view. Publics are interested, for example, from the your cooperation for the society, you do something for the society. Or for example, they are interested whether you do or you help the local supplier or not. So if this is so, so the publics are interested in your accounting information. Point number 7 is owner. Of course, owners also need accounting information. Depends on the form of the business organizations, we can have 3 sort of owners. If a business is started by one person, the owner can be called as a proprietor or sole proprietor. If businesses is started by several persons, which is partnership, the owners can be called as a partner. But if a business is, in the case of joint stock company, شركة هاي سهامي, in this case, the owners can be called as well as the shareholders. Now the question is, why owner need accounting information? Of course, number one, they need to check what the profitability of the business. Why they check the profitability of the business? Because they have made investment in the business. So they have made a huge investment in the business, and for that investment, they need a sort of compensation. So they have to check the profitability of the business. How was the profitability of the business? Of course, they need to check the increase turnover. Turnover once again means the profit of the business. They have to check whether the profitability of the business increased as compared to the previous year or not. Whether it is increasing or not, whether it is upward moving or whether it is downward moving. So they have to check these things in the business. They have to check that the stable or rising dividend rates. They have to check that, for example, whether the profitability of the business is stable or whether the profitability of the business is rising. Don't think about the dividend. We'll talk inshallah about the dividend. Dividend is in the case of giant stock companies, شركة هاي سهمية. In the case of giant stock companies, when a giant stock company divide the profit among shareholders, this can be called as what? As a dividend. So the shareholders check that whether the dividend is stable or not, or whether the dividend is raising up. So never the shareholders will invest in the company in which the dividend is neither stable as well as it is not rising. And if it is downward moving, so the shareholders may not make a kind of investment in that company. That's the case. Point number 4, they want to check the sound financial position, whether the position of the business is good or not, whether our assets are more than our liabilities or not. If their asset is more, it means the position of the business is good. Otherwise, it means they have a bad position in the business. Point number 5, constantly growing and expanding business volumes. They want to check that, for example, whether our business is growing or expanding or not. Expanding or growing of the business mean, for example, volume of production should increase over the business, our number of customers should increase, our number of brands should increase, our profitability should increase, and so on. If this is so, it means so it is good for their future performance. So these are the points that the owners of the business need. They check the profitability, and increasing the profitability, at least the profit should be stable if it is not rising. Financial position of the business is how or whether their business is growing or not. And the last point, I think, increasing net asset values, whether value of our asset increase or not. For example, what is asset? We will explain later on, but for the time being, anything which you have in the business and it has some value can be called as what? As asset. Not in the case of business only, even in the case of personal individuals. Even an individual, for example, has something and that has a value can be called as what? Asset. For example, you have a mobile. It has a value, it can be called as asset. You have a, for example, computer. It has a value, it can be called as asset. You have money in your pocket, it has a value, it can be called asset. You have land and buildings, machines, cars, tracks, anything which you have, and that has a value that can be called as what? Asset. So owners, as a shareholder, as a partner, or we can say as a sole proprietor, always they are interested that whether the value of their asset increase in the business or not. And the last one, I guess, future earning potentials and growth prospects. So they want to check not only the past performance of the business, so they also want to check the future profitability of the business. So these are the few points usually which are relating with the past. Now they want to check the future profitability of the business. How will be the future profitability of the business? And based on the following informations, the owners may decide to either expand the business, either, for example, contract the business or reduce the size of the business, either to sell their business, or either to bring the new partners in the business, or either, for example, to sell their business to someone else, right? So these are the sort of decisions that can be taken by owner of the business through the accounting information. And the last one is, of course, management. Managements are the people who manage the business on the behalf of the owner. They need accounting information because of this thing. Number one, they want to check that is the rate of return to the owner adequate? How much was our return in the last year? how much was our profitability, whether the profitability that we made in the business adequate, or whether it is enough for owner of the business or not, whether the profit can fulfill the expectation of owner or not. So this is the questions that management need to, of course, solve it through the accounting information. And of course, accounting information will provide such kinds of information that whether our return or profitability will satisfy our owner or not. Point number one. Point number two, which is very important, is this one. Does the company have enough cash? Whether enough cash is available in the business or not. Enough cash might be used for the purpose of investment, or enough cash might be used for the purpose of repayment of loan, expansion of the business, and so on. Always the shareholder, always the management should, for example, find out whether enough money or cash is available in the business or not. Always there should be enough cash to manage day-to-day operation of the business, and not only day-to-day operation of the business, for the future expansion of the business, for the repayment of liabilities or loan and so on. Enough money is available, and this can be found out from accounting information. Managements also need accounting information because of this one. Which product line is the most profitable? Should any product line be eliminated? Management need accounting information that which product is more profitable for us. Suppose we produce two products, product A and product B. Whether product A is more profitable or whether product B is more profitable. Suppose we can say we may have product C also. Product C may not be profitable, so the company or the management may decide to please eliminate, or please, we can say, reduce the product of the company into two instead of three. Why? Because the C product is not profitable for us. All such kinds of decisions can be taken from the accounting information. Well, this one. Fourth one, what is the cost of manufacturing each product or providing each services, right? The next thing that the management want to have knowledge or information from the accounting information is regarding the cost of the product. The product that we have produced or the product that we have made, how much was the cost of that one? Hazina. Cost means hazina. How much was the cost of that one? Well, and based on that one, so they can go for the selling price. Number one, they want to find out the cost, and based on the cost, they want to determine the selling price. Price means, of course, how much they have to sell in the market, right? So these are the points that the management need from the accounting information. One more thing that the management need is this one. Can the company afford to give its employee pay raise this year? The management need this information that whether they can have enough profitability to raise salary of their employees in this year or not, right? So this is also one of the reasons that why the management need accounting information. Very important. Of course, rate of return can be checked, enough money is available in the business or not, which product is more profitable, how much is the cost of each product, how much we should sell it, and so on. Not only this one, management need accounting information because of the following reasons. Because of formulating strategies. In order to make policies and strategies for the business, accounting information is needed. Planning is needed. They need accounting information in order to control different activities in the business. They need to control the activities of marketers. They need to control the activity of finance. They need to control the activity of production. They need to control the activity of anyone who are in the organizations. And based on that, those information, they can make a nice decision for the futures. And through those decisions, of course, they can optimize the use of different resources based on a proper plan, so they will have the maximum usage of the resource. Resource can be materials, resource can be machines, resource can be monetary resource can be human resource can be any source of resource that we have in the organization. Unless you have a proper decision, you have a proper strategy, you cannot optimize the use of these resources. So these are the sort of the type of the users they need accounting informations. So for the more informations, so please go for the YouTube channel. So subscribe Mohibullah Zamani. So inshallah you will receive the rest of the information. So please be in contact.